Hi, my name is Alan from Alan Way Property. Welcome back to my YouTube channel. In today's video, I'm going to talk about this topic. Are we at the peak of the property market? This is after the Urban Redevelopment Authority or URA released data on the real estate statistics for the second quarter of 2024. By looking at the data, we can analyze and predict the market trend coupled with my ground sentiment. For private homeowners planning to sell or buyers who plan to buy, please remember to watch on. Here, how can we forget about the HDB market too? After all, HDB has also released data for the second quarter of 2024 public housing data on the same day. However, I will do this on a separate video. Otherwise, this video can be very lengthy. Anyway, let's go deeper into the private numbers and see if the authority will cool the market ahead. Here, let's go. In URA media release, private residential market see further moderation of price and rental momentum in second quarter 2024. Overall, private housing prices rose at a slower pace of 0.9% in second quarter of 2024, compared to the 1.4% increase in the previous quarter. The quarterly average price increase of 1.2% in the first half of 2024 was lower than the quarterly average price increase of 1.7% in 2023. And 2.1% in 2022. Private housing rental fell for the third consecutive quarter by 0.8% in second quarter of 2024, following the 1.9% decline in the previous quarter. Wow, really chim here. I see already, I also blur. Never mind, I'm going to digest the number one by one for you in layman terms. Let me give you a quick rundown on prices first. Take note, all the prices are extracted from URA quarterly reported data from URA website. At a glance, private property prices have increased by 0.9% from first quarter 2024 to second quarter 2024. This is a slight decrease from the 1.4% from the previous quarter. Next, I break down the numbers for the lender and non-lender segment. For the lender segment, the PPI has increased by 1.8% from first quarter 2024 to the second quarter. This is a slight decrease from the high of 2.5% in the previous quarter. You see, I never bluff you. Lender properties will still hold very well due to scarcity. As for the non-lender properties, which apply to both condominiums and apartments, the PPI has increased by a moderate 0.6% from first quarter 2024 to the second quarter. This is a slight decrease from the 1% from the previous quarter. This means that condominium prices are moderating. If prices are stabilizing, do you think the authority will step itself on its own feet? In URA press release, they have also released some other data which include rental for the rental market. The rental index has seen a decline of 0.8% from first quarter 2024 to the second quarter. This is a continued decline since fourth quarter 2023. As I previously mentioned in my earlier video on the rental market, more supply, weaker demand will spell trouble for the leasing market. But you don't worry, rental rates have already chunked by 8% for the full 2023. A drop of 2.8% today is only chicken feed. Let's take a look at the take-up rate of uncompleted private residential units, or basically new homes. Take-up rate for second quarter 2024 is only 725 units. This was a decrease from the 1,164 units in the first quarter of 2024. If I round up the total number of new homes that was sold in 2023, it recorded 6,400 units. If I round out the number of new homes for the first and second quarter of 2024, the numbers stood at 1,889 units. Let us assume the numbers will double for this year. The number will hover around 3,700 to 4,000 units. But take note, there will be more new launches in the second part of the year. Therefore, this number should gradually increase, assuming the take-up rate is good. However, this is still below the 6,400 units that were sold last year. This also means buyers are resistant to high prices. It's not because they don't want to buy, it's because money not enough. Do you understand or not? Anyway, this video is not easy to do. There are many data to compare and analyze. Appreciate it if you could help me to smash the like button and share this video around. As you know, the authority always emphasizes that affordability is the key to a sustainable property market. Property prices cannot run away faster than real income. This brings me back to my other question. How affordable are property prices to household income? Here, based on the Department of Statistics press release on key household income trends, 2023 published on the 7th of February 2024. It mentioned that among residents employed household, median monthly household income from work grew by 7.6% in nominal terms, from $10,099 in 2022 to $10,869 in 2023. After adjusting for inflation, the median monthly household income from work rose 2.8% in real terms in 2023. From 2018 to 2023, median monthly household income from work of residents employed household increased 3.1%, cumulative or 0.6% per annum in real terms. Here, the above cover only median income. This may not be accurate if I use the above data for the private property market. Most of those who can afford private properties are easily at the 25% upper percentile. Anyway, it states that the median monthly household income from work grew by 7.6% in nominal terms from 2022 to 2023. I assume this is the same as for those in the higher income bracket. If I refer back to the PPI of private residential property for the whole of 2023, the PPI has increased by 6.4%. Here, can we say that income has risen in parallel with private property prices? On this part, I can only say it's 50-50, as I don't have access to high income earners numbers. Only IRAS will know. Anyway, remember to pay your income tax for nation building. However, if I am to calculate how much private prices have appreciated since COVID-19, let's use 4th quarter 2019 as the base. In this table, I painstakingly compute the PPI for the private residential property. Prices have increased by 34% since 4th quarter 2019. If I break down the PPI into landed property, it has surged by 42%. Landed homes have outperformed very well. As for non-landed property, prices have appreciated by 32%. Here, if your income has increased by 30+% since COVID, then this is easy for you to swallow. Otherwise, most HDB upgraders would have been priced out. This is something the authority should seriously look into with their data. Maybe introduce more EC sites with more stringent requirements, like PLH flats. For those that watch under here, are you curious how much the different location would have increased today? Let me share with you a lobang that has never been widely shared online. For the CCR area, prices have increased by only a miserable 14%. Why like that? I mentioned many times in my CBD video. You all go and enjoy it yourself. For the RCR region, prices have appreciated by 40%, and the OCR has also increased by 40%. Some of you here may say, Alan, prices have gone up so much. Shouldn't the authority cool the market? Well, don't you remember? They did. Cooling measures were announced one after another, most recently in September 2022, when the authorities imposed a 15-month wait-out period for private property owners to buy HDB resale flats, to a hike in ABSD across board in April 2023 to cool the red-hot private property market. All these measures have in one way or another dampened demand, especially in the private property market. Here, we can see a slower pace of 0.9% increase as seen in second quarter of 2024. After going through all the numbers, there doesn't seem to be a big spike in the property index based on the latest figures. In fact, we can see that prices have been moderating. New homes take-up rate is mediocre at most. Break-even costs are stubbornly high due to high land costs plus construction costs. This only led to high selling price. For developers that bought last year when land costs were high, they will have to price to sell. Don't say I never share this with you. For others who bought CCR land at OCR prices this year, no doubt, you all what all the way. For those who hope the authority will cool the market, I don't see any strong evidence, especially in the private market. The hefty ABSD at the outright 60% on foreigners are the highest deterrent on runaway prices. As of now, we can only wait for the price to recalibrate on their own, instead of government intervention. For the authority to help HDB upgraders to upgrade, this is also a touching issue. The government role is to ensure affordable housing, not for you to make more money through their policies, unless the noise gets louder. Otherwise, business as usual. Before we part off, I would like to share an upcoming event by the Delicious Association of Singapore. they are organizing a Walk with Roy, which is a 24 hours challenge by traversing all 13 DAS Learning Center. The purpose is to raise awareness and gather much needed funds for their bursary funds, which support students from low-income families. This walk will cover 90 kilometers in 24 hours and will be held on the 4th to 5th October. You can either walk with Roy or make a donation. Anyway, the Dyslexia Association of Singapore provide a wide range of service cater for individuals with learning difficulties. If you wish to find out more about their program, you can visit their website for more information. That's all. Please help to support their program as much as you support this channel. Thank you.